recording. In my opinion, right, the most important financial statement is the income statement, because this is what the company does, right? So how are they generating the revenues? What does it cost them to make those revenues? What are the other costs associated with running the business? How are they performing, right? So that's, in my opinion, the most important thing, because that's why the business exists. I would say the second most important thing is, how are you using your cash? For some of you who dabble around in the stock market, you hear things like the cash burn rate. But the statement of cash flow really is telling you, how did the company spend its cash from one period to the next? So within the month, how did they spend their cash? Within the quarter, within the year, how did this company spend their cash? And I think I've said this quote in this class. I know I've said it in others, but there's a quote by Joe Biden that says, "Don't tell me what your values are. Show me your budget, and I will tell you what your values are." In other words, what he's saying is, don't tell me how important things are to you, and then I go and look at your bank statement and see where your cash is going, and you go, "Oh, I'm really into helping the homeless and helping those with food insecurities," and then all your money is going to stay in like plush hotels and eat at fancy restaurants, right? There's a natural disconnect. But if you show me where your cash is going, or if you think about where your cash is going, that really exhibits or demonstrates what it is that you truly value. So that's why I find this to be extremely important, because it's helping us understand, where's the company putting their money, their most valuable resource, the most valuable asset being cash. How are they spending their cash? Are there questions? Jasmine says, how easy is it to manipulate the cash flow statement? Everything is easy to be manipulated once you understand how it works and you understand what people are looking for. It's very easy to manipulate people. I'll just say that. And so to manipulate the cash flow statement is not complicated at all. It's really just math working one way or another. And I just think about what's going to be important to you, and I make sure that's what's illustrated in the statement of cash flows. I'll explain more as we get into the details of it. So here we've got the purpose. Okay? So the purpose of the statement of cash flow, number one is, not number one, because these aren't in necessarily order, but one thing that it does is it helps us predict the future, right? When you're thinking about your own personal budget and where your money was spent in March and April is a good predictor of where your money is going to be spent in May, right? Because we get ourselves into these arrangements where we've agreed to pay our landlord rent, and we agreed to pay for our childcare. We normally spend $200 a month on food. So what we've done in the past is a prediction of the future. So you can look at a company's their statement of cash flow, and get an indicator of where they're planning to spend money in the future. The second bullet point talks about our ability to evaluate management's decision. Okay? Do I agree or disagree with where you're spending your cash? Okay? So we can that'll help us understand, right, the company's values. Does their cash flows align with what they purport their values to be? Let's not lose sight of the whole purpose of financial statements, which is to provide useful information to investors and creditors. So if I'm an investor, right, my focus is, can you pay me out? Can you pay me money? When we, the company, make profits, how much of those profits can you give back to me, an owner of the company, right? If I'm a creditor, if I'm loaning you money, I'm not loaning you money because I'm a philanthropist. I'm loaning you money because I want to get money back, right? I'm charging you for borrowing that money, the interest. So you're looking at their statement of cash flow to make decisions or make predictions about their ability to either pay out dividends if you're an investor, or pay back the money that they borrowed with interest if you're a creditor. The other thing that's helpful, and this is starting to answer your question, Jason, is it shows the relationship of net income to cash flow. So this whole semester we've been talking about the accrual basis of accounting, which says record revenue when earned, record expenses when used, right? And revenue minus expenses equals your net income. What's missing from that whole equation is what happened to the cash. You earned the revenue, but you didn't get any cash. You recorded an expense, but you didn't pay any cash. So don't only tell me what your performance was from an accrual basis, but show me how much cash you're generating. Questions, comments? So here's what I mean by that. So here is Apple's latest financial statements. Okay? And this is a subset of their balance sheet, and down here is a subset of their income statement. Okay? And so as you can see here, their net income for 2019 was $55 billion. $55 billion. And I believe we all agreed back in January when we first looked at this that that was very impressive. I think a couple of you pointed out, well, it was 59 billion the year before that, so why is it only 55 billion? And I'm like, I was worth 1.8 million a month ago, and you're complaining because I'm now worth 1.6. I mean, anyway. So $55 billion is what their net income was on for the year ended 2019. But here, look at their cash, right? Their cash only went up. What is that? What is that? Someone do that math for me. 48 minus 26. That's about 24 billion. 22?
Yeah, pretty close. 20.
Oh, someone's done the math for me. Thank you. So 55 billion in net income is not the same as 23 billion in cash. So it leads to the next logical question. If you earned $55 billion, why did your cash only go up by 23 billion? I feel like if we were in the classroom right now, you guys' mouths would be like, what? Wow, I really want to know. But you guys all have your cameras off, and so you guys are probably like sleeping. Side note, we're going into summer, and I know you all are getting excited for your summer break. I know I am. So I wanted to take this time to, as you're thinking about what you're going to do this summer, maybe you want to do some summer reading. And I want to recommend 2 accounting books for you. Okay? There's only 2 books, accounting books, that I think are worth reading. By the way, this here is not one of the books that I would recommend reading. So, but a bunch of spoiler alerts at the end of the semester. This is not one of the best books to read. But one of them, I think I have it down here. Where'd it go? Oh, here it is. I love this book. This book is called Call to Account by Paul Klinkman. And oh my goodness, this book is like really, really good. What the book does is it walks you through how the accounting standards came into being, but they do it in the context of thinking about frauds that have happened, right? And so the accounting industry, much like our United States government, is a very reactive industry. And so as things happen, they go, oh man, we can't let that happen again. So let's put an accounting standard or an auditing standard in place that will prevent that from happening again or mitigate the risk if it happens. What I love about this book is it's not a textbook, it's stories, right? So they tell you stories, and it starts with, so-and-so was a little farm, was a little boy working on his farm and he had dreams to do this. So it reads kind of like a novel. Excellent book, Call to Account by Paul Klinkman. The other book I would recommend is this book called, there we go, Financial Shenanigans: How to Detect Accounting Gimmicks and Fraud in Financial Reports by Howard Shillett. When we're back on campus, this book is actually available at the Las Positas library. I asked them to make a copy of this book available, and they agreed. So I appreciate that. So Jason, this is a great book to read because it teaches you how to look at financial statements and start to see unusual patterns in them, which would be an indicator of potential fraud. So one of the things that they lay out is looking at the difference between a company's net income and their cash, right? So here, Apple, with $58 billion, $55 billion, well, I went too far, $55 billion in net income, and comparing that to their $23 billion in cash flow, right? So we have to ask ourselves, what's happening there? Does that make sense? Questions? Or comments?
Are we trying to figure out if Apple committed fraud, or where are you trying to question the fact that why their income is lower than their cash flow, or the opposite?
I think it's a good question to ask. I wouldn't ask it in the context of, did Apple commit fraud? Because that sounds very accusatory. I would ask it in the context of, hey, Apple, what happened to all your cash if you earned $55 billion in net income? Where'd the cash go? And here's the point of this. We can look to the statement of cash flow to help answer that question, right? Where did all your cash go? So this is Apple's this is Apple's statement of cash flows. And so here you can see this is how much cash they started with at the beginning of the year, $25.9 billion. And then this is what they ended with, $50 billion. And then right here, you can see the difference, right? So they're saying all in, our cash increased by $24 billion. Okay. But what's so fascinating and informative about this, right, is it's going to tell us what happened to the cash. So that $24 billion, where did it come from? And if you recall, all the way back to January, when we first talked about the 4 financial statements, we said the statement of cash flow has 3 components to it: cash generated by operating activities, cash generated by investing activities, and cash used in or generated from financing activities. So if we want to know where that $24 billion came from, we can see that 69 billion actually came from operating activities. Wait, what? So you mean they didn't have 50, even though they had 55 billion in net income, they actually generated $69 billion in income from operating activities. They also generated another $46 billion in investing activities. Pause. Apple was in the business of selling software and hardware, right? And all their commercials tell us that if we wake up in the morning and we have our iPhone with us, we could do amazing things. But just them doing investing activities is generating about as much as their operating activities. And then, so now you're thinking 69, 45, that's about 100 and something, 114 trillion. Are we in the trillion? 69 billion? I don't know. These are big numbers. But then $90 billion is what they've used in financing activities. So even though that they've generated a lot of income from operating and investing activities, they've paid out $90 billion related to their financing activities. So just stopping right there, this tells me that Apple is really good at what they do, right? Because they can generate $69 billion. It also tells me that they're flushed with cash because their investing activities are generating almost as much as their very successful operating activities. And then they spent $90 billion. And when you're spending money in financing activities, what that means is that you are getting out of debt. Or in Apple's case, of that 90 billion, 67 billion was repurchasing common stock, right? So they're going around to their shareholders and saying, "Hey, let me have those shares back. I'll take those shares back," reducing the amount of ownership within their company, right? Because one of 2 reasons: either they're not doing well and they're trying to get ahead of the curve, or they're doing extremely well and they don't want a bunch of other people to benefit from their success that's going to happen in the future. I know you guys want to ask questions now, so I'm going to pause.
So what would other in financing activities be?
This other down here, 105?
Yeah.
I do not know. That's a similar question to what Noé was asking on Tuesday. And the number is so small that they said it's not even worth talking about it.
Yeah, it's probably a bunch of things just put into one account.
Yes.
Is there any other numbers? Like, obviously we see net income here, which obviously we can get from the income statement. And for example, like the first couple of weeks, we did an activity where numbers were missing from the different financial statements.
Yeah.
Is there any other numbers here that we can get from other income, not income, but other financial statements?
Yes, actually, Noé, all these numbers are coming from the other financial statements.
mainly in the operating activities?
Say that again.
Mainly in the operating activities, not the investing financial.
Even those are coming from the other financial statements, from the balance sheet, mainly from the balance sheet, some from the income statement, some from the statement of retained earnings.
Okay.
So this takes me back to Jasmine's question. How easy is it to manipulate the cash flow statement? Well, if you understand how the cash flow statement works, you know that you don't necessarily have to manipulate the cash flow statement. You have to manipulate things on the balance sheet, on the income statement, which then is going to naturally be reflected in the statement of cash flow. Sounds like I'm trying to teach you guys how to commit fraud. Jasmine's asking on chat, does the cash from the operating activities include both the equity investment and marketable securities? So the equity method, equity investments and marketable securities would be under investing activities. So those are both investments. So let me put you guys' mind at ease right now. I am not going to attempt to teach you how to prepare a statement of cash flow. We are too far along in the semester. I'm tired. You might be tired, but I'm tired. And so I don't even go there in this class. If you take my 1B, the first thing we do is we pick up on the statement of cash flow and we learn how to prepare the statement of cash flow. Because it could be a complicated, it is a complicated process. And I think it's unfair that it happens this late in the semester. But here's what I do want you to walk away with a good understanding of. Okay? And that is, of every transaction, or what for all the accounting transactions, how do we make them fall into the right bucket? Cash flow from operating activities, cash flow from investing activities, cash flow from financing activities. So let's look at the operating activities. Okay. So if we look at this in detail, and Noe kind of pointed this out. First of all, let me tell you what this represents. So operating activities are those activities that create revenue, expenses, gains, losses, everything that impacts your net income. The other thing that's included in operating activities are changes in your current assets and your current liabilities. Those are called your operating assets. Things that have to be paid within the next 12 months generally are, or that will be used in the next 12 months, generally are part of your normal operations. Okay, so we're talking about inventory, accounts receivable, accounts payable, accrued liabilities. So if you look here at Apple's operating activities, and it's three years, right? So this is 2019, 2018, 2017. They actually tell you this is how much we had in net income. 55 billion. That's what we told you on the income statement. However, of that 55 billion, 12 billion of that was for depreciation, amortization, this stupid thing that accountants make us do, where we're spreading the cost of our asset over its useful life. But guess what? Even though we recorded $12 billion in depreciation expense, we didn't spend any cash, right? So we're adding that back to our net income. Same thing here with share-based compensation expense. So $6 billion of expenses related to them giving stock out to employees, but that didn't cost them any cash. So they're adding that back. And then they look at their current assets and liabilities and look at what's changed. Okay? And again, without going into too much detail, we'll pick it up in September, I promise. They're saying if accounts receivable went down, then we're adding that back to our operating activities. If accounts payable, let's see, what's another one? If inventory went up, we're subtracting that from our cash flow from operating activities. So adding all this together, we didn't have 55 billion. So yeah, we had $55 billion in net income, but the actual cash, right, greenbacks that we received in 2019 from doing what we do is $69,391,000,000. Questions? So share-based compensation, it doesn't necessarily increase cash. How do I want to say this? So it doesn't increase, it does not increase cash. I'm sorry, let me read the question. So the question is, how does share-based compensation expense increase cash in the text or the chat? But it does not increase cash. But what they're saying is, if you want to compare our net income to our cash flow from operating activities, well, our net income includes expenses that we did not pay cash for. So we did not pay cash to the employees when we gave them stock in the company. So even though it's reduced from our net income, from a cash basis, we need to add that back to our net income. Other questions on operating activities? Well, then let's, oh, no, here comes another question. If an employee wants to cash out of their stock, does that cause the cash from operating if an employee wants to cash out of their stock, does that cause the cash from operating activities to decrease? The answer is no. Because again, that has nothing to do with the company, right? When an employee wants to sell their shares, they're selling their shares to another shareholder, to me, to you. And so that doesn't affect Apple's cash in any way. All right, well, let's talk about investing activities. So what goes in, let's recap, what goes in the operating activities section would be things that affect net income, changes in current assets, changes in current liabilities. The activities that go into investing activities are transactions that affect long-term assets. So long-term assets would be property, plant, and equipment, purchasing that and disposing of that. It would be investments, long-term investments, your equity investments, your available for sale investments. If you acquire a company all out, that would also go there as well. So here, you can see that Apple, right, generated $45 billion in investing activities. One thing that I'm always interested in looking at for companies is right here, payments for acquisition of property, plant, and equipment, right? Because what you want to see is the company consistently investing in itself, buying better equipment so that they can become more efficient, buying better equipment because they perceive that we're going to be around for the next 7 to 10 years and we need this new equipment to sustain us. Okay. So 12 billion, 13 billion, and then here it drops to 10 billion. So I'm a little concerned, but not a lot concerned. I'd want to see maybe a 5-year trend to see what the average is. But you do want to see that they're consistently investing in themselves here. And this is usually the largest number, but Apple is not a usual company. So here, the maturity of their marketable securities, right? So this is bonds and CDs and their investments that have a maturity date to it. $40 billion is what they've earned. Plus, from what they've sold, another $57 billion of them saying, okay, let's sell, let's get out of this business here, or get out of this investment. Okay. So $96 billion just from investing activities. Okay. You kind of want to look at these as a net number because they're selling and then buying, right? So they're selling and buying, right? So they're still on the up on that. And then not a lot going on, relatively speaking, in terms of them purchasing other companies. And I don't know if that was Evan that asked me that question about about others, but I don't know what's driving. They're not going to tell us what's in this other. Okay.
Yeah, it's going up.
Because in their mind, it's not important. Okay. So they don't feel obligated to tell us that. Questions?
What would a non-marketable security be? Just like another type of investment?
Yeah, it's an investment that is that's not on. It's an investment that normal people can't just buy and sell. Did I say that right? How do I want to say that? So non-marketable securities are investments that aren't available to the general public. So in other words, like if you owned 20% of my accounting firm, right? That is definitely an investment, but you can't just go and sell 50% of your ownership to someone else, right? Because I'm a privately held company. You and I have agreements about when you can sell it, what you can sell it for, right? So you can't just go drop it on the market and sell it. Whereas I'm an owner in a company, or Apple, but I can decide today to sell or decide today to buy. Those are marketable. There's a readily available market.
Okay.
I'm sitting in front of my window and I watched my wife get in my car, drive off, turn back in, drive out again, and then turn back in. I think she's going crazy. Pray for me. Financing activities. This is the third category, right? So let's recap. What goes in the operating activity section is basically the income statement, right? So all those transactions are there. Plus on the balance sheet, current assets, current liabilities, right? Then on the investing, we have our long-term assets. Okay? That's on the balance sheet. On the financing activities, in this section, we pick up the last two components, which would be our long-term liabilities and our stockholders' equity. So I like to think of it in the context of, I got an income statement and a balance sheet. My income statement goes in the operating section. On the balance sheet, current assets and liabilities go in operating. Long-term assets go in investing. Long-term liabilities, stockholders' equity, goes into financing. Another way to think of it is when you're financing, right? This we talked about in chapter 10, a company has two ways in which they can finance their company. They can either take out debt or they can sell ownership in the company, right? So taking out debt is long-term liability. Ownership in the company is equity. Okay. So here with Apple, 2019, 2018, 2017, 2019, $90 billion is cash that they used, right? So we're talking cash here for related to financing activities, paying off creditors and investors. So this is one where you go, wait a second, 90 billion from 17 billion, like 2 years ago? What's going on? And look at this, $67 billion. Repurchases of common stock, right? Treasury stock, what we talked about, what we called it in this class. Right? So they're buying back their stock. If you go back to that slide, why would a company want to repurchase stock, right? It could be a number of reasons why Apple wants to buy back its own stock. But based on everything else that I see with the company's financial statements, it tells me they've got something cooking that's really good. And watching this consistent trend, they used to be in the 30s, they jumped to 72 billion, 66 billion, right? I want to remain a stockholder as long as I can in Apple because obviously they know more than I do about their company and they want their own shares.
So if they want to buy back stock in their company, you don't have to sell them your stock, right? Only if you're willing to?
I would say generally speaking, yes. Generally speaking.
So they can't forcibly take their stocks back from you?
Well, all the stocks have certain terms and conditions associated with it. And so there may be some, in their articles and corporations, triggers that they could pull, and they may be drastic, where they go, you have to sell us back the shares. Right?
Can you request like an astronomical amount of money, or is that part of one of the stipulations of getting stock, I guess?
Well, I think if it came down to it, and clearly not talking about me, because they'd be like, boy, keep your little stock. We don't care about you. But when it came down to it, if they wanted to force a stockholder, the stockholder can say, okay, well, you have to pay me this amount of money. They say, we're only going to pay you this much. Then we have a lawsuit, and then you hire forensic accountants and attorneys, and they would agree to what the fair market value of the stock is worth.
Okay.
Which is more than just what it's trading for right now, right? Because what it's trading for is if you wanted to buy 1 share or 100 shares or 1,000 shares. But if you wanted to buy 5% of the company, you wouldn't go to E-Trade or Robinhood to buy 5% of the company. You would walk in there and say, hey, here's my briefcase with all my money. I've been watching too much TV, you guys. Let's agree to a price. Right. And then you're going to negotiate the price and the terms and all those things.
Okay.
Is that kind of similarly like when the government wants to buy back your land, they can't just do it because they want to. They have to have some kind of we're doing it because of this. We're require this highway or this thing that's going to improve overall, the city or the state. it's required by that, and then they'll pay you what your home or what your land is valued at.
Yes. That's called eminent domain. And
Yeah,
it's one of the reasons why I do not like investing in real estate. Because my first real estate purchase investment, I lost it. It was in Sacramento, and I ended up losing it because of eminent domain. And not only did they say we're taking the property, but then to your point, Madison, the amount they offered us, we thought was way too low. And so we ended up hiring attorneys. We had to sue. And what we ended up ultimately receiving, that's why what we ended up ultimately receiving, sure, was more than what they offered, but then we have to pay the attorneys. So it really was just a headache all the way around, right? And we just, so I don't like real estate investing.
Yeah, attorney's fees will kick you in the butt.
Yeah, they will. Questions on financing activities?
Well, can I ask a question about Robinhood?
Sure.
Do you know what the max is for like when you try to purchase company stock on there?
I do not know what the max is, or if they even have a maximum.
I think it depends on if you just have Robinhood regular. I think you have whatever you have in your Robinhood account. That's your max. So if you have $2, $3, $4,000, that's your max.
Oh, it's up here. Okay.
But if you have like Robinhood Gold or like a higher level, they give you instant access to whatever amount is in your bank account linked to Robinhood.
Okay. It just came up because you said you can't like buy 5% of a company through that. So I was like, oh, do you know?
Well, and I don't know if you can or can't, but if I was going to buy 5% of the company, I wouldn't put $1 million in my Robinhood account and then purchase it through there. I would schedule a meeting with the company and say, hey, look, I want an ownership in your company, and what are you willing to give me, right, in exchange for this $1 million? Because I'm going to get more than stock. It's like going to Costco, right, or versus Safeway. If I go buy, or even just going to Safeway, if I buy a little canister of mustard, it's going to cost me more per ounce than if I buy a bigger canister of mustard, versus if I'm buying a Costco size of mustard. So the more you're purchasing, the bigger the discount they're willing to offer you. All right, well, this is going to be, oh, there we go. That's cute. We're going to play a game. We are going to play a game. And not everyone gets to participate, unfortunately. The only people that get to participate are those whose name is on this wheel. So if you don't see your name on the wheel, you can't participate. So I'm going to spin the wheel, and it's going to land on Manny.
I don't see the wheel.
All right.
Either.
Manny, here's your question. Let's see. Wait, can you guys see the wheel?
No, we cannot.
Oh, you can see that? Oh, so cool. What? Okay. Let's see. Resume share. Oh, close that out. Can you see it now?
I cannot.
No.
Okay. Stop share. So I want you guys, you know, I don't want Manny to think I'm full. There we go. See that, Manny? Can you see it now?
I see it.
Yes.
All right. Manny, you won. So here's your question. Here's your question. Going back to this right here. A company reports net income of 28,000. So your question is, what section would that go in on the statement of cash flow? Operating, investing, financing, and would it cause your cash flow to go up or down?
I would say it goes up and operating.
You say up and operating. That's right. Round of applause for Manny. Excellent. Let's see here. Can you guys still see my screen?
Yes.
Okay. So let's spin the wheel again. See who our next contestant's going to be. Next winner. See it spinning? You see it landing?
Yeah, it looks great.
Who's that? Elijah. Elijah, are you here?
Yeah, I'm here.
All right, here we go. Here's your question. The company purchased $6,000 of stock of another company. Is that operating, investing, financing, and would that cause the company's cash flow to go up or down? For those of you who weren't selected, you're welcome to type your answers in the chat as well. You can help Elijah out in the chat.
Investing and go up.
Investing and go up.
Actually, no, it would go down. It would go down. Their cash would.
Cash would go. It would be investing. Cash would go down. They're purchasing stock, so that's a use of cash. Elijah. All right. Next volunteer. Oh, we're just doing all the S's here. Is that Justin? Is Justin in the house? Is Justin in the house? He is not in the house. It's a great way to take roll as well. All right. Justin didn't make the final cut. Let's see if we can get out of these S's here. We can't, but we did get to Mendoza. Scotty. Are you with us, Scotty?
He's in the chat.
Woot, woot. All right. All the excitement. All right, here we go, Scotty. Your question is, the company reported $800 in depreciation expense and $500 in amortization expenses. Is that an operating activity, investing activity, or financing activity? Is that causing your cash flow to go up or down? Probably scratching his beard, thinking about his answer. Man. Oh. Did we lose Scotty? Seen some help coming in through the chat. No,
He said down.
Oh, he said down. Oh, I missed that. And then what section? Operating, investing, financing. Operating and down. Is that the consensus from the group? It's actually operating and up. It's operating and up. Remember, it's up because your operating section is taking your net income and saying, but how do I compare my net income to my cash? So anything that was non-cash related, it's making your cash flow actually go up because you really didn't spend the cash. So you pretended like you spent the money, expenses, but you really didn't spend the money. We'll talk about it in 1B. All right. Appreciate you, Scotty.
Quick question on that one. Is expenses like that and amortization the only way that happens where you say you spent cash, but you actually really didn't?
You said expenses and you said
Amortization.
it's also accruals, right? When we record accruals, record liabilities, we're recording expense, but we didn't actually spend the cash.
Okay.
It's revenue. We're recording accounts receivable, but we didn't actually receive the cash. It's prepaid expenses. We spent the cash, but we haven't recorded the expense.
So there's quite a few. Okay.
Yeah. 1B. All right, here we go. Spinning wheel, landing on Sam. That's Sam I am. That's Sam I am. All right. The company purchased $750 of treasury stock. Operating and investing financing, is cash flow going up or down? Okay. Down. Operating and investing financing. Investing and down, says Chris. Sam's going for the suspense, like the cliffhanger. Investing, question. It's financing. And it's down. It is down, but it's financing. Treasury stock is part of equity. And what goes in equity is your long-term debt and what goes in financing is your long-term debt and your equity transactions. Good work. Okay. Sam is safe from the wheel of horror. All right, and our next person is, this thing is only going like around, who is that? Evan.
Hi.
Hi. Here we go. Number 5, the company sold equipment for $400 less than its book value.
That. 1 second.
Don't worry, your classmates are going to help you. They've been so helpful all along.
Oh, okay.
No, that was completely facetious.
What's your like question? Like, is it?
So this transaction, does it go into operating, investing, or financing? And does it cause the cash flow to go up or down?
Okay.
Is it investing and down?
Investing and down.
Just because, wait, is it equipment a long-term asset or current asset? I don't remember.
Equipment is a long-term asset.
Okay, then I stick with my answer. I don't know if it's right, but that's what I'm going with.
Actually operating and up.
Oh, wow. Okay.
Yeah, oh wow. Operating up. Here's why it's operating, okay? Because what we're talking about, they sold equipment for $400 less than its book value. So that means they sold equipment at a loss. Losses impact net income.
Oh, okay.
So that's why it's operating. But why is it going up? When they lost money from that sale, it made their net income go down. But the company is not in the business of selling equipment. That's why it's a loss, right? So we're adding it back to our net income to figure out what our cash flow from operating activities are.
Got it.
1B, you're gonna, oh, here we go. 1B, you're gonna have all the clarity you need. What if they sold it above book value? Would it still increase cash from operating activities? I don't know. All right, next person is, we're just gonna knock out all the, we're to the A's now. Mason, is Mason in the house?
I am.
All right, Mason, here we go. Oh, we're gonna answer Jasmine's question. The company sold equipment for $900 more than its book value.
Okay. So would that be
Go ahead.
sold equipment for $900 more? I'm gonna guess operating and down.
It's operating and down.
Woo.
Good work. Okay. I'll explain it again. Sold equipment for $900 more than its book value. That means they had a gain on sale of equipment, which means it made their net income higher, right? Because they had a gain. But when you're comparing net income to your cash flow from operating activities, okay, that gain had nothing to do with your operating activities. So you have to take it out of your net income. So that's what makes it go down.
This would be different if it was inventory, correct?
Yes.
Okay.
I was noticing this on the homework. Every answer seemed like the opposite of what it should be.
And that's why we picked this up in 1B. But for now, we thank Mason for his participation. All right. We're moving through the alphabet now. And we're landing on Miriam. Miriam, are you in the house?
Yes.
Okay. Oh, she's so excited. The company borrows $10,000. Is that operating, investing, financing, and does it make cash flow go up or down?
It goes up and financing.
Goes up and financing. And yes, I think that's right. I think that's a financing guy. That is correct. Good work. Okay. Can I get props for this picture here? I think that's like genius.
Good picture.
So I know you're not supposed to explain your jokes, but it's a loan shark. It's a shark, loan shark. Sure, you can borrow. All right. Get it. All right. Let's see. Who's next? It is Alex.
Oh, let's do it. Let's give it a good shot.
All right, sir. The company collects $100 on its outstanding notes receivable.
All right, I'm gonna say financing and up.
You're going to say financing and up. believe it is investing and up. So props
So-
we're not calling it operating because we're talking about notes receivable, right? But notes receivable would be a long-term asset.
Okay.
Yeah, so that's what I would go in investing.
Yeah, I can see that.
All right, good work, good work, good work. Oh, the plot thickens. Everyone's got a chance to be a star now. Is that Michelle? Is that your first name? Michelle? Michelle, are you here? Well, it doesn't matter what we call her because she's not even here. So. Moving on. Let's pick on. Let's frustrate. Van Kirk. Silas. Silas, are you here? Silas is here. He's muted. He's got his video off. And we're calling on you. So wake up, Silas. The company's current liabilities decreased by $2,750 from the prior period. Silas, are you participating? It's like that awkward time when like I'm in the classroom and I'm walking up to the person and they're like got their head down, they're sleeping. And like everyone in the class knows that I'm like looking at him or her and except that person. Oh, look at Evan jumping in to save the day. Up and operating. I believe that's, oh, it's down. It's down. It's operating and down. Operating and down. Here's the thought process. If it goes, I'm sorry?
I was going to ask, is it just because we owe less?
Yes. So if we owe less, that means we paid more than what we spent in that current.
Okay, I get it.
All right. Thanks for stepping in to save Silas's fanny. All right, here we go. Next on the list is the great and powerful. Oh, I don't know where that is. Who's that? Chin. Ruby Chin. Are you in the house, Ruby Chin? I don't mean like physically, like literally in the house. I know you're literally in the house. That's like the rules. All right, here we go. The company's accounts receivable decreased by $2,000 from the prior period. Ruby, is that operating, investing, financing, is that going to cause cash flow to go up or down? Operating and, oh, that's Tatiana. Operating and up, says Tatiana. Operating up, says Elijah. And Ruby says up, operating. Is that your final answer? Sure. It's operating, right? Current asset, and it's going up because people owe you less, which means that they paid you more. Excellent, Ruby, thank you. All right, you are safe from the will of death. And we now turn our attention to Jeremy. Is Jeremy with us? Jeremy, I see you're here with no sound and no video. But are you ready?
sir.
Oh,
Yes,
he's
sir.
back. Okay, Jeremy's in the house. He's fired up. The company reports a net loss of $18,000. Operating, investing, financing, and is your cash flow going up or down?
Operating cash flow down. Okay, so I'm putting in the chat. Yeah.
Operating and down.
Yes, sir.
That's what Jeremy says. With confidence, might I add. And for good reason. Nailed it. Good job, sir. All right. Oh, man. The chance of you being selected has just gone up. And now it's at 100% for you. Pat warned hard, Rhea. Hope I said that right. Did I say that right, Rhea? Rhea? Rhea. All right, here we go. The company sells a plant asset. Operating, investing, financing, is cash flow going up or down? Investing, up. Yes. Oh, up, says Rhea. And investing, says Rhea. And that is correct. Excellent work. So here's how this works, right? We're talking about companies selling equipment or something and gain or loss. So when a company sells equipment and a gain or loss, or they sell equipment, there's two components to it. There's the cash that they received, which is this right here that's going into investing. And then the other component is the gain or loss that they reported. And that's what's being adjusted in the operating section. 1B. We'll pick it up in 1B. All right, here we go. Good work, Rhea. Okay, here we go. Next on the list is, Nanthawan. Nanthawan. Are you ready, Nanthawan? She says yes. Like, I'm scared of you. The company's prepaid insurance increased by $3,500 from the prior period. Operating, investing, financing. Does cash flow go up or down? Operating down, suggests Elijah. Okay. Operating down, says Chris and Jassim and Nanthawan. And, that's it. Yes, operating down. Prepaid insurance, current asset. It's going up, which means you spent more money, right? You just haven't recorded the expense yet. So it makes your expenses go down. Excellent work.
So which one was that one again?
That was operating down.
Quick question. So only long-term assets go in investing?
Yes.
Okay, and then current is operating. Okay.
Yes. All right, we have about 6 more to go. So unfortunately, some of you will not be a winner, but Bradley is a winner. And the crowd goes wild. Okay, here we go. The company purchases bonds from its local municipality.
I'm gonna go with investing and down.
He's going investing and down.
Sorry, up. Yeah, up because they're. Oh no.
Oh wait, whoa, wait, what'd you say?
Yeah, they're purchasing the bonds, right? So down.
Yeah, they're purchasing the bond, so down.
That's like the direction the cash is moving. That's how I'm trying to think about it.
Yes, that's the correct way to think about it. Investing and down. Thank you, Mr. Hoppert. Am I saying that right? Hoppert. Yeah,
Yep.
All right. Here we go. I know you're all excited. You're like, pick me, pick me, pick me. Madison. You still here, Madison?
Yes.
All right. Look at the excitement. Listen to the excitement in her voice. The company's accrued payroll increased by $4,500 from the prior period. Operating, investing, financing, does cash flow go up or down?
I think it goes down into operating.
Down and operating. How about up and operating? Up and operating. Accrued payroll, liability account, right? If accrued payroll goes up, that means we debited payroll expense, credited the liability. So our expenses went up, made our net income go down, but we really didn't spend any money. So we're adding it back to our net income.
Well, if this was the payroll expense and not accrued payroll, then it would have been, or she would have been right.
Yes. However, yes, then then it would be the correct answer. But it does not, we don't look at changes in expense accounts. We look at changes in assets and liability and equity accounts.
Okay, cool.
All right. Thank you, Madison. Okay, I see some people itching to be winners. And guess what? Your dream has just come true. Adrian. Are you with it? Oh, Hadrian's here. There we go. Hadrian's here. He's ready to rock and roll. You ready to rock and roll, Hadrian? He says here, and yes, the company sold $1,000 of treasury stock. Operating, investing, financing, does cash flow go up or down? Hadrian says down and operating. Elijah says up and financing. Jasmine says up and financing. Financing and up. Tatiana says up. You sold it, so it's going up. That's cash that you're getting. And yes, it's in financing because treasury stock is part of equity. Long-term assets, long-term liabilities and equity both go into the financing section. All right, thank you, Adrian. All right, here we go. I can just sit here all day and just watch this wheel spin. All right, are you here with us today, Brandon? Stop clapping, stop clapping, stop clapping, stop clapping. He's not here, he's not here, he's not Here we go. Mr. Caraway. I love that woo at the end of every clock. All right, here we go. Deontay. All right, you guys are getting the lag? Yes? Can you see the screen?
Yes.
All right. The company issues $5,000 of common stock. My frames are dropping. It's just when the wheel spins for me. Up, invest. Okay. All right. All right. Hopefully y'all can see transaction number 18. And Deontay is going to answer this question. The company issues $5,000 of common stock. Is that operating, investing, financing? And does it make your cash flow go up or down? I think Deontay went into a state of meditation. Oh no, he responded. Sorry. Investing in up, says Deontay. When the company's issuing, there you go. It's financing and up. It's financing and up. So when they're issuing common stock is part of equity, right? And equity goes into financing. And it's going up because they're issuing common stock and in exchange receiving cash. All right, here comes that lagging wheel that some of you like, some of you don't.
So does that mean, so would you consider common stock not a long-term asset? Is that why it's not investing?
Common stock is equity.
Okay.
If we were investing in another company's common stock, then it would be a marketable security or an equity investment in equity, an equity investment, excuse me, or available for sale or something like that.
Okay.
All right, Maximilian, are you ready?
Yep.
Oh, those two really good videos. I'm not going to show this. The company pays $750 in dividends.
Operating and it goes down.
Okay, he says operating and it goes down. Tatiana agrees. Jasmine does not agree. Neither does Evan. Neither do I. Financing and it goes down. Dividends are part of equity. Right, so long-term liabilities and equity are in financing. So dividends are part of equity, and you're correct, it goes down. All right, so I'm not even sure how many we have left, but unfortunately, everybody's going to get to be a winner today. But you will. Let's see, is Ishan with us today? Ishan or Isan? Yes, okay, glad I got it right. The company acquires long-term assets for $8,000. Is that an operating activity, an investing activity, a financing activity? And does that make your cash flow go up or down? Operating and up. Is that your final answer? I assume that is his final answer. It's investing and down. So long-term assets are part of investing, right? And acquire, right? Language class. Acquire means to purchase, means to spend money. So that would make your cash flow go down. All right, here we go. Now we've got a list here. Here we go. There's like a 8% chance you'll be selected. 100% chance for you. The company pays $500 for the principal balance of its outstanding notes payable. Operating, investing, financing. Does cash flow go up or down?
Probably a down in financing.
Probably down in financing. How about absolutely down in financing? It's a liability that's being paid and you're being paid, so it's down, and it's a long-term liability. Most excellent. All right, here we go. All right, percentage of being selected is higher and higher. Joseph is not here. Let's try it again. Here we go. Yanwei. Here. Yanwei, are you ready? Hi. The company sells stock purchased in another company. Is that operating, investing, or financing? Does cash flow go up or down?
Financing. Up.
Financing and up is your suggestion. The answer is investing and up. They're selling stock from another company, right? So I think we were just talking about this. If it's stock in another company, that's an investment. If it was stock in your own company, that would be equity. So you're selling, and you're right, it's up because you're selling stock, so you're receiving money. All right, thank you. All right, here we go. Questions get harder now. All right, Miss Tatiana. Are you ready? Here. Oh, no, that was it. All right. Indulge me for 1 second and let me make sure I got everyone else who is actually here today. All those wonderful people who really wanted to participate, but they were not selected, like Chris and Noe and Evan and Mr. Steele in the house. He is. And,
yes, sir.
And
Romina.
oh yeah, I know how to read. I got it. My God. All right. If I get it wrong, you'll email me. You'll tell me I got it wrong. All right. So one last thing to say about statement of cash flow. There's two ways that a company can prepare its statement of cash flow. Okay? One is the indirect method, and the other one is the direct method. Okay? What we've been just looking at, and the one that Apple uses, is called the indirect method. Okay? The indirect method starts with net income, like we saw with Apple, 55 billion. And then it's telling you, here's all the things that happened that got us to our cash flow of $69 billion. And as you can kind of see, it's really confusing. The other way that a company can prepare its statement of cash flow is using the direct method. So if you can just kind of envision with me what the direct method would look like. Okay. So with the direct method, Apple would say, this is our cash received from customers. And they'll show them out. They'll say, this is our cash paid to suppliers for inventory. They'd show them out. Here's our cash paid to employees. They'd show them out. Here's our cash paid to other vendors for operating activities. And they'd show them out. And then it would equal $69 billion. So if you can just envision that type of cash flow compared to the one that we were just talking about, which one do you think would be easier for investors to understand, direct or indirect? Direct. I heard a couple people say, and yes. Okay, another question for you. Which method do you think most companies use? Okay, before you answer that, think about it, right? The purpose of financial statements is to provide useful information to investors and creditors. Which one do you think most companies use, indirect or direct? Oh, you guys did. Oh, you didn't fall for my misdirection.
Indirect.
Yeah, they use the indirect. Okay, here's why. Okay, so the rules, generally accepted accounting principle, says we think you should prepare a statement of cash flow using the direct method because that's going to be easier for the user of the financial statement to understand. But they also say if you do that, you should also show a reconciliation from net income to your cash from operating activities. So then companies throw their hands up and say, wait a second, so you want me to do two of them? No, thank you. Okay. So even though it seems very confusing, and I promise you, I'll confuse you even more. No, I'll help you understand it when we get to 1B. It's actually easier for a company to prepare the statement of cash flow using the indirect method as compared to the direct method. Questions? All right. Well, family, that's all I have for today. So enjoy your weekend. Enjoy phase 2 of the sheltering in place opening, but enjoy
Phase 2.
Yeah, but enjoy it responsibly.
That's where Captain America 2 comes.
Yeah. Look, if I see someone flying, I'm definitely gonna stay in the house if someone starts flying through my neighborhood. All right, y'all, have a great weekend, and see you on next week. And it's all going to be about getting you ready for the final exam.
Thank
You're welcome.
you.
Thanks, Professor.
Thank you.
You all are welcome.
Hey,
Thanks, Mr. Bell. Have a good one.
Thank you.
Hey, Mr. Bell, I emailed you about a week ago, just something regarding like myself in the class and everything like that. But I